Opening hook the mystery, we're taught that money runs on trust. That belief holds markets together, stabilizes nations, and keeps economies alive. But history tells a darker story. What happens when trust collapses, yet debt still survives? Empires have fallen, currencies have vanished, governments have defaulted, but debt somehow keeps ruling long after confidence dies. Why? Setting the stage, history and tease across centuries, trust has been fragile. Kings broke promises, banks failed, paper money collapsed, and yet debt systems endured. From ancient Mesopotamian clay tablets to modern central banks, one pattern keeps repeating. When belief disappears, power restructures, but obligations remain. The twist is that debt doesn't need trust the way money does. It needs enforcement. Origins: trust. As the foundation, early economies were built on reputation and personal obligation. Debt was social, local, and limited. Trust mattered because enforcement was weak. If trust died, the system died with it. Value and belief were inseparable. Rise: debt becomes institutional. As states centralized power, debt transformed. Governments issued bonds. Banks intermediated promises. Trust shifted from people to institutions. Legal systems replaced reputation. Debt no longer depended on belief, depended on law, force, and continuity. Even when rulers fell, the debts often remained. Breaking point: trust collapses. Every major crisis follows the same path. Hyperinflation, bank runs, currency failure. Trust evaporates almost overnight. But debt contracts don't disappear. They're restructured, enforced, or transferred. The system sheds belief, but keeps obligations intact. Fallout: survival without trust. When trust dies, people flee to hard assets, foreign currencies, or survival economics. But governments respond by tightening controls. Capital restrictions, bailouts, new monetary frameworks. Debt survives because it's embedded into survival itself. Taxation, access, legality. Failed fixes, recycling the system. Each collapse promises reform, new currencies, new regulations, new safeguards. Yet the same structure reemerges. Debt expands faster than growth. Trust is rebuilt temporarily. Then it breaks again. The fixes don't change the foundation, they reinforce it. Modern parallels the pattern today. Global debt exceeds real economic output by historic margins. Entire systems operate on rollover and confidence theater. Digital money, central bank interventions, and emergency liquidity hide instability, but don't remove it. Trust is thinner than ever, yet debt has never been stronger. 3 takeaways. First, trust is optional for debt, but essential for freedom. Second, systems survive crises by shifting belief, not removing control. Third, when debt rules, collapse becomes a reset, not an ending. Closing warning and call to action: the real danger isn't losing trust, it's what replaces it. When belief disappears, systems rely on enforcement instead of consent. Understanding this pattern is the first step toward independence. If this perspective challenged you, subscribe for deeper financial history. And keep questioning what really survives when systems fail.